Chicago's luxury real estate market has grown exponentially in recent years. In fact, the number of million-dollar homes changing hands in the Chicagoland market has more than tripled since 2000 and more than doubled since the peak of the housing boom in 2006. But high-end housing is also facing headwinds in the form of increased taxes and economic volatility. I'm Peter Olesker with At Properties, and in our final 2019 installment of At the Market, we're taking a closer look at luxury real estate in Chicago. I'm here in Winnetka on the North Shore lakefront with At Properties co-founders Thad Wong and Mike Golden. Welcome back, guys.
Welcome back, Peter.
We're going to be focusing on this town as well as two distinct neighborhoods in the city, the Gold Coast and the newly minted West Loop. But Halloween is coming up, so I thought maybe we'd start by reading some scary headlines, and then I'm going to give you guys a quiz, okay?
Okay.
All right, so headline number one, this is from The Real Deal, July 25th. Chicago area luxury home market continues slide in Q2. From Crane Chicago Business on August 1st, upper end home sales take a steep dive. And from Crane's, just a couple of weeks ago, Winnetka Mansion sells for less than it did 26 years ago. So quiz time, ready? In Winnetka, through the first 9 months of 2018, last year, 128 homes sold for $1 million or more. How many homes have sold in Winnetka above $1 million through the first 3 quarters of this year, 2019?
88.
I'm not going to be quite so pessimistic. It's a little bit of a loaded question, but I'm going to go 112.
Close. It's 125. So 3 fewer homes sold in Winnetka this year.
lives in
See,
Winnetka.
I'm the optimist.
I live in Lincoln Park.
We're going to go to the city now.
Fullerton in 2 years, so.
Heading into the city. In Chicago, 210 homes sold for $2 million or more in the first 9 months of 2018. How many 2 million plus home sales have we seen through 3 quarters this year?
107.
212.
226.
Whoa! Hey!
I'm off. Reading all this fear has gotten me spooked.
So someone since winter, you the pessimist and I'm the optimist.
All right, so you know, granted the Chicago area luxury market is down overall, but what's going on here? How do we reconcile some of these negative headlines with, you know, some good news, if not, you know, decent news, if not good news in some of these pockets of the market at least?
You can find houses that are depictive of fabulous sales and great returns, and you can find homes that are extreme losses and, you know, tell a scary tale. But in general, I think that luxury is down a bit, primarily having to do with the federal tax changes, having to do with SALT capped at $10,000. That's affected a lot of homes over $1 million, over $1.5 million, and the uncertainty of our tax situation locally. People are unsure now of exactly what it's going to cost them to live in Chicago, and so people are probably being a little bit more conservative on what they're purchasing than exorbitant.
Mike?
And I also think it probably feels a little bit different because there's more product on the market. There are more homes for sale, so a smaller percentage of those higher end homes is selling probably year over year, and that makes people feel like the market's down, when in fact, when you spill off some of those numbers, it's really not so bad, and in fact, it's pretty good in some markets.
Yeah. Well, looking at the numbers, I think one thing that we've seen is 2019 is down compared to 2018, but 2018 was a banner year for luxury sales, you know, by a wide margin. If you look at 2019 compared to 2017, we're not seeing these, like, you know, scary numbers. We're seeing that the luxury market is down maybe 5%, 4%. So, you know, something you've said all along this year is that maybe taking a little bit of a breather isn't a bad thing. Do you still agree with that?
Yeah, I do. I think that 17 felt good, like we had this natural progression since the recovery in, call it 10. We didn't have any big bump locally. 18 was a big bump. It was, you know, injected with some new construction sales and got everybody excited. And the problem is people have a short-term memory and they get used to that short-term excitement and they consider that normal again. It's not normal. And so going back to this year, though it's a little down, it's not terribly down considering all the turmoil out there and the concern and the conversation, the hype, the headlines. It's not as down as I would anticipate. I would anticipate with the tempo and the feel of the market and the conversation that it would be a lot worse than it actually is. In this case, reality is much better than hype.
Well, let's drill down on some of these individual markets, starting with Winnetka. All right, so we welcome in Amy Core, Vice President of Brokerage Services in our Winnetka office. Amy, this is what Winnetka's all about, right? We got the lake, we got trees.
It certainly is.
So you heard our quiz, 3 fewer $1 million sales in Winnetka year to date versus last year. If we look at $3 million sales, we're actually up a little bit, 17 transactions versus 11. Are you surprised by the numbers?
Actually I'm not. I think to Thad's point, I feel like there's hype out there about our market not being really that great, but I feel like over the last 3 years that we really have kind of been steady as she goes. And I think when you hit the luxury market, there's some really great opportunities for people to buy who want to get kind of in that uber luxury in Winnetka. And I think there are also a lot of people who are looking to move down and kind of move out into more maintenance-free living. So I think that's why we're starting to see quite so much of that activity on the luxury end.
Okay, so what's selling and what's sitting?
So I would say sitting right now kind of in Winnetka, as far as what we're seeing, are some of the older homes. We do have a lot of inventory that is early 1900s, and unless somebody has put some significant money into it over the years, they have a lot of deferred maintenance. And so somebody coming in looking to buy sort of sees that as dollar signs that they don't necessarily want to put into a home. What we are seeing right now are some of the slightly newer construction homes that are moving. Those are, built 10 years ago, where, they are actually kind of a newer product, but not brand new. So you're not paying that brand new price tag, but there's only a little bit that you'd have to do to kind of turn it into something that you'd want. What we're also seeing too is the age-old thing, which is if it looks great, it's gonna move. And that is getting your home looking perfect, staged, doing all of the maintenance stuff that you need to do in order to have it look turnkey for a buyer that's coming into the community.
I think we're also seeing a move toward people wanting to be close to town in Winnetka, right? We're seeing some new restaurants come in, businesses. There's really a renaissance. Mm-hmm. Would you say that that's affecting the residential market too? Are people looking for homes that are closer to town?
Certainly. I mean, I think when you look at pockets in Winnetka, people reference the tree streets. And I think it's because they are, great homes, great values, but they're also walking distance to town. You can walk to dinner, and have dinner with the kids for the evening.
Or without the kids.
Or without the kids, yes, that's also a bonus sometimes too. But I just think it's what we call sort of that urban suburban feel. I think a lot of us who had to or did move out of the city to raise our family in the suburbs doesn't mean that we want to have to lose that lifestyle of being able to go out and do things. And I think you're really getting that in Winnetka. And I mean, where else can you live in a community where it takes you less than 30 minutes to get downtown? You're almost lakefront, and you've got the choice of great restaurants, great schools, great parks. All of the 3 different train stations. The nice thing is you don't have to cross railroad tracks in order to get to the east side of town. So there's really a lot to be said for a community like Winnetka.
Wrapping it up on Winnetka, any final thoughts?
I just think it's a great community, and I think that our market's going to continue to plug along and be solid. And I think if sellers are really realistic and want to be able to move their properties, they're going to be able to, because there are buyers that are moving into the community.
Okay, good. Thanks, Amy.
All right, thank you for having me.
Let's turn our attention to the city now, and when you think of luxury, obviously the first neighborhood that comes to mind is the Gold Coast. I met Rick Sobin down there, and he told me what was happening in that market. Rick, luxury has been a big story in Chicago for the last few years. Things are slowing down a little bit, definitely, but there's kind of two. I think there's the new construction angle where we're seeing pricing hit $1,200, $1,300 a foot in some cases. And then there's buildings like the one we're standing in, Water Tower Place. Yep. We're seeing some good values. So talk a little bit about kind of this end of the market.
Sure. So buildings in the Gold Coast, historically, some are in favor, some are not in favor, depending on timing, depending on where we're at in a cycle. But Water Tower over the last 5 to 6 years has seen tremendous upside, with a lot of people seeing great opportunity in large units, good pricing, able to gut a unit down to the studs, start over again, and end up when it's finished with a very well-appointed unit at a good price point, with there still being a nice opportunity there for a profit.
Let's talk a little bit about new construction, because that is really I think, kind of the big focus of the Gold Coast right now is these new buildings, 9 Walton, a couple years ago 4 East Elm. I'm looking across the street at the Waldorf, and we're seeing pretty big numbers.
Sure.
Where is that market right now? Where's it headed?
I think it's very interesting that Chicago continues to push the limit for upper bracket. We thought 9 Walton was going to maybe be the top of the market for price per square foot, but There's a new development going up at 12 Maple that's going to be the newest exclusive high-end building in the city of Chicago that's definitely going to push those price points and absolutely push the amenities.
Let me ask you about this dichotomy, new construction versus existing homes. Why does it seem to be so magnified in the Gold Coast?
Well, there is a very limited supply of new construction. Remember that after the recession, there was a wide gap where there was effectively no new construction built in the Gold Coast whatsoever. I think the last one to deliver was 10 East Delaware, and the first new construction to come after that was not until 2017, which was 4 East Elm. So there's a wide period where there wasn't a lot of new construction, and you have a lot of density of product that was delivered over the last 40 years. So you've got dated inventory. So the price people will pay for, as we know, we've talked about a number of times, what they're willing to pay for dated versus new is there's a wide difference. And new construction there, the land values are the highest in the city. So you couple that with construction costs, you're not able to really build anything in the Gold Coast under $1,000 a foot. You're just not. But a lot of the product that's already existing, people aren't willing to pay more than half that. So you do have this very wide range.
The Gold Coast numbers definitely paint the picture of a down market. Why is there such a big decline in Gold Coast sales year over year?
Well, I also think, as we talked about before, 2018 was just a banner year for luxury anyway. So you're going to see some decline, and you're also seeing luxury, meaning $1 million and up prices, in many more neighborhoods than you have ever in the past. So if you go back 10, 15 years, the luxury marketplaces really were the Gold Coast for condominiums and Lincoln Park for single-family homes. Everything else was definitely more entry level, and that was really about it. Now you can find $1 million plus residences in the South Loop, in the West Loop, in River North, in neighborhood after neighborhood. So I think that that's driving part of that distinction, is that you're starting to see people migrate and be willing to pay up and pay $1 million, $2+ million for homes in these other neighborhoods where you never saw those kind of prices before. So that's starting to dilute where the luxury buyers go, as opposed to everyone who was in the past totally focused on the Gold Coast.
Yeah, looking at pricing too, we didn't talk about One Bennett. Those units, because of the architecture, because of the views, because of the amenities, are trading at the highest prices in the city.
Yeah, I think you're right. So, other than One Bennett, where there are still some units available, there is, and it's not in the Gold Coast proper, there is almost no new construction in the Gold Coast. Rick talked about this building at 12 West Maple. It's a really unique product. Only 12 residences. It's got this exclusive London-style club. Sounds really cool. I think there's a private sushi restaurant and spa, pool on the roof. The interesting thing with this project is that the developer is not just doing what the last guy did. It's pretty cutting edge. Do you think this is where Gold Coast luxury is headed in the 2020s?
That's a tough call. It has a lot to do with location and with the ability to do on the site, and also this particular developer's expertise. This particular developer has the ability to do something very avant-garde, and he has a proven track record for breaking trends. And so I do think this will be a spectacular building. I think a lot of people would love to live there because of the amenities, because of the access to the club. And I think the club will be the most successful club in Chicago.
It's interesting that we're talking about a club and its impact on residential, because we're going to turn our attention to the West Loop now, where Soho House, another club, had a big impact on the luxury residential market there. And I met George Schultz in the neighborhood to talk about the unprecedented growth in the West Loop.
George Schultz. We are at Properties Fulton Market office here in the West Loop. We are across the street from Google headquarters. Right up the street 20 years ago, At Properties opened its first real estate office. You've been in the neighborhood for a long time, ever since the red light, Vivo, Marché days. What's happened here?
Well, the West Loop has really come to life. There's nothing like this place anywhere else in the country. You take a meat packing district, you take a warehouse district, and you've created this great place where there's jobs and the creation of millions of square feet of office space. It's really a place that you can come and walk outside your door and go to a world-class restaurant, walk to work, go to a park, take your kids to school. It offers everything. It really is a unique proposition that is like nowhere else.
We are here at Avec. It's a new project that we're representing. It's under construction right next door. And why is this so desirable right now?
Well, I mean, it's a big departure from what traditionally, especially in this neighborhood that you saw for larger homes, townhomes that had vertical living. What you have here at Avec and in the West Loop that seems to be the hot product are those 3-4 bedrooms on one level. This allows for a flexible lifestyle where you can work from home, you can be a single person and have great entertainment space. You also get a lot more outdoor space. You can have a family and you can see your kids run around. You don't have to have the multi-floor tiered level where you're carrying things up and down. So it's really a lifestyle that is attractive for multiple different people.
What does luxury mean in the West Loop?
Well, I think it all comes down to the authenticity of the product. And really, you know, going back to the roots of the West Loop where it's warehouse, meat packing, you know, the coolness factor is what the West Loop offers that other neighborhoods can't. And it's being true to that past history, both architecturally, but also giving a modern lifestyle with a large living space that gives a great flexibility. And that's what it's about. Luxury is cool.
We're almost immune to it now because there's 2 or 3 news items every day about development in the West Loop. But have you guys seen anything like this in your 25 years selling real estate in Chicago?
We've seen neighborhoods change, but we've never seen a neighborhood kind of explode and take on a life of its own like this one.
Cool part about it is what came first. There were some condo buildings that were done back in the 90s and the early 2000s, but what really came first was a lot of the restaurants. And that brought in the hype. The Soho House opened. That brought in the cool factor. Then you started having some of the shared office start taking peaks in that area, and it's grown and grown and grown. And as far as the future goes, I think that it's going to continue moving. I think you'll have greater migration from the Loop into the West Loop, into Fulton Market. It's a great place to work. It's a great place to live. Has a fabulous elementary school, awesome transportation, great food, and actually a couple of decent parks. So I don't think that there's much holding it back at all. And the cost of land with the affordable requirements, when it comes to future residential, I don't see it becoming inexpensive. You're not going to be able to build an entry-level new construction product there anytime in the future.
Let's talk a little bit about the luxury market over there. You know, it's not surprisingly, it's exploded also. So in 2017, there were 22 sales over $1 million. Year to date, there have been 76 sales over $1 million. A few years back, we couldn't find a single transaction above $500 a square foot. Now we're seeing $700 pretty regularly. We've seen a few sales at $800. There's been one sale over $1,000 a square foot. Mike, where do you think things are heading in that neighborhood?
You know, I think the West Loop is going to be one of the most sought after neighborhoods in Chicago over the next 10 to 20 years. So I think that we'll start to see comparable pricing to the Gold Coast, to some of the other hot neighborhoods in the city. And it kind of stands to reason because cost of construction is largely what's driving pricing these days. And there's no difference in the cost of construction in the West Loop versus Lincoln Park versus the Gold Coast. So if you're going to see these buildings built, the developers are going to have to sell them at a certain point or they're not going to build them at all. So I think the West Loop, because of the infrastructure, because of the restaurants, just because of the vibe of the neighborhood, can start to see and push pricing as high as we've seen in other neighborhoods. I don't know that you'll match some of the top tier 1,200 plus a foot pricing yet, but it's going to be a pretty spectacular neighborhood over the next.
Yeah, you'll see it. You'll see it within a decade for sure.
Parting shots, guys. How do you see things playing out for the rest of 2019 and looking ahead to 2020? What's your level of confidence?
In Chicago, I'm confident. I think Chicago is going to withstand this current storm and we're going to see great values in the future. That being said, it's always nerve-wracking, but you know, you're supposed to buy when everybody's a bit nervous. You know, it's usually a buying signal, so you should have the confidence in order to do that. Chicago's not going anywhere. We've got, you know, amazing assets in this city that make it a world-class city internationally. So know that Chicago will win at the end of the day.
And Mike, if you're a seller?
You know, if I'm a seller, and I want to get sold in 2020, I'm gonna need to be realistic. I'm gonna need to be realistic that the market's probably gonna be a buyer's market, not a seller's market. It's a great time to buy. Interest rates are back down again below 4%, and with obviously kind of a bit of a shaky market, and sellers are motivated, it's a great time to buy. But if you're a seller and you're realistic and you're priced appropriately, you're going to sell, and it's okay because you're going to buy somewhere else, and you'll make it back up as the market swings back. But real estate's a cyclical world that we live in, and you've got to be okay with market cycles. This is not a terrible market cycle. This is not 2009 where the world collapsed and values were falling by 20-30% in a year. We're okay. We're not in bad shape, and we are going to weather a normal cycle, and we're going to come out stronger for it. And I feel the same way Thad does. I think Chicago is the greatest city in the United States for many different reasons, for all the different things that we offer here. And I think Chicago comes out on top. We just have to get through a couple of the hiccups that we've had.
Thad, Mike, thanks for joining me. Always a pleasure.
Thank you.
I look forward to doing this next year. We'll see you in 2020 at the market.